Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Great to see everyone. Welcome to the Caffeinate and Dominate crew. Thanks as always for being a part of the show. Without you, well, there is no show. So thanks as always. So what do we have going on today? This whole week really isn't about anything but Wednesday. And if you're looking at the daily time frame at the moment and you're seeing the fact that we're just hovering at the moment in what I would consider to be my version of a reversion to the mean. What do I mean by that? Well, there's an average that exists. That's the conversation with reversion to the mean. But there's no one level, gang. It could be a 50% Fibonacci of the last major move. For some people, it's certain simple moving averages. For me, it's the 34 EMA wave with at least a nod if my propulsion dots are lit up to the 21. 21s can be a little aggressive, sometimes a little too aggressive, but they are worth considering. So define what your version of the mean is. And remember that everyone's got their own. There's no one way to view what a mean reversion is. For me, we're at one right now. So why are we then hovering here? Shouldn't there be a reaction? And the idea here is looking at the economic calendar to understand what's next. Looking at the economic calendar to ask yourself, why would traders and investors just hit the pause button? What are they waiting for? And if we take a look at the economic calendar, which I have somewhere here, let's see, I think that's it. There we go. So if you take a look at the economic calendar, scroll through today, not a lot really to be reacting to in a way that would lead us to want to front run in any significant way. What's going to happen tomorrow? Consumer confidence numbers at the top of the hour. Keep an eye on that. The Consumer Board consumer confidence number. It's a red hot zone, high impact, high volatility scheduled event. That's what a hot zone is. We go into tomorrow. We've got OPEC, but then we've got FOMC Meester. It's 6:15 in the morning. It will affect that pre-market day trading window. But at 9 a.m., this is what really, in this case, the three major financial centers are going to have their ECB, the head of the ECB, head of the Bank of England, head of the FOMC, or head of the Federal Reserve. They're all going to be speaking. I don't know what this is. Central Bank Palooza, a panel discussion at the European Central Bank. So they're all hanging out in Portugal. Very nice. And that's really where, if this reversion to the mean, we've got there on those end of day timeframes, if we're going to continue to see follow through, likely it's going to be Wednesday. So that is in many ways what we are waiting on. But as always, gang, this show is about your questions. So let's go ahead and dive into them. First up is, can I please review some of the nuances of trading options on futures? I read somewhere that there is also no day trading margin requirement for these types of options. Well, it depends, Gwen. So first of all, nuances of trading options are going to be the same nuances for trading futures. There's not going to be anything ever that I want to do on the underlying option, right? The derivative of, that I won't be at least considering on contract itself. In other words, if I'm bearish the contract, then I'm looking at some sort of put option, right? If I'm bullish the S&P futures, I'll be looking at a call option. As far as day trading margin requirement, remember, when you're trading options on futures, you need margin. There's no way to trade options on futures without margin, or futures for that matter. I don't believe you can trade cash. I could be wrong. Who knows what has transpired in different regulatory situations, but I don't know that you can trade futures options without a margin account. So when you say you don't need day trading margin, well, you don't need day trading margin for an option, but you would for the futures contract. So there's a couple of things you're working on there in the question, which is day trading margin for futures. Ask your broker, because some will allow you to trade the S&P futures for as little as $500, but that's the underlying futures contract. But let's say now you want to trade an option on the futures contract. No, I don't believe there's day trading margin that's offered on options, and you do need a margin account. As far as I know, I'm always open to being wrong, but as far as I know, you need a margin account. So thank you for the question. All right, next up. Good morning, Alan. How are you? I've been a very busy lady. Yeah, I tell you what, I probably have more energy now at closing in at 51 than I did at 31. And that's just, I love what I do, but I appreciate that. You're worn. I know how worn I am from listening and reviewing Saturday's class. Awesome. Yeah, yesterday I kind of took it easy, and big shout out to Lorna, otherwise known as the Lorna Bot. She manages to feel like she's everywhere all at once. She is human. I have confirmation of that, but she is able to exhibit many bot-like characteristics. But yeah, I kind of took it easy yesterday, and then we've got a very busy schedule this week, so we're going to get right back into it. I appreciate that, Alan. Thank you, and you all can still join me for the live trading, because it does not start till Friday. So we have 2 days of live trading coming up with the Pro. We have 4 days of live trading coming up with the Elite. So it is still, that window is still open to join us, get the updated HPMRs, and day trade with me live. All right. Next question is FXE and FXB. Which do I like better for long puts? Well, they both have some nice downtrending structure. What I would do to look at FXE and FXB is I would actually take a look at the 6E. Here's your 6B, double red, good respect for the wave on corrections, retracements. Here's 6E, a little bit more neutral. So based on market structure, I would go with the pound. I would go with the 6B and the FXB, which is to say that that ETF, it's viable. 6B is viable. The options on 6B should be more liquid. The options on on FXB are not as liquid. So make sure you check out the option chain on that. What are my thoughts on Exxon near the Darvis low, neutral on trend, slow stow? All right, let's take a look. So here is XOM. I would rather be long. I'm with you there. I would rather be long. Neutral market. We had the slow stow. And I know it's a little difficult to see. I was talking to some of the members saying, look, on the oversold, if you want to lighten up the color so you can see it a little bit better and thicken up that line, and even on the overbought, you want to thicken up that line just so you can see it so it pops a little bit more. So you can see that white line a little bit better down there. When we get down to that 20, that low setting on this low stow, which actually did not happen until 622. That's this candle right there. That's where we want to think about it. We're actually leaving. We're heading north from that level. So 622, 623, and 624 are specifically the window for the entry, not the 27th. And then depending on where we are today, not today either. So I do like it, but it's left, right? As we know, if a train leaves the station, we missed a train. If the bus leaves the stop, we've missed a bus. This is, at least for now, it's left the station, it's left the bus stop, and we'll have to wait for another opportunity in that area, preferably around that Darvis. So I do like it. And if you're already in it, awesome. Enjoy the ride. You're going to open up higher today. But if you're not, today is not the day. Higher highs are not the process for oversold buys. I know a lot of folks love their Momo entries. I do not advocate Momo entries as a general rule. And because there are almost always better exhaustion entries, better confirmed, that precede a Momo. And that's the way I would look at that. And this specific window. What are the currencies telling us this morning? Well, let's go take a look. So to do that, I like to look at FinViz, FINVIZ. We'll head on over there. We go to the Forex, click on the performance, and what's the mood, right? What's the barometer telling us? Risk appetite, mostly risk appetite. Weak yen, strong com dolls, mostly risk appetite. In other words, equities should be generally supported. But remember, just like equities will continue to move, so too will that barometer. So if the yen starts to strengthen, and or the Australian dollar and the Canadian dollar start to weaken, remember that then would be a switch of that risk appetite inching then a little closer to potential risk aversion. So thanks for the question. We have not looked at that currency barometer in a bit here in Charts and Coffee, so I appreciate that. Okay, next up is how do you navigate ETFDB to find the list for populating the multi-charts? Gordon, you go to etfdb.com and let me jump on over there. Bear with me. Question, hit the little magnifying glass. Now you're going to say, look at DIA. And yes, ETFDB has changed their name, but if you click on ETFDB, it goes there. Gang, holdings. That's it. Look up the symbol, click on holdings from the left side of the menu. All right, next up is where do you see XLE in the next few weeks? Michael, let me see. Let me look into the future. I'm kidding, but you all know how I feel about anything that's going to lead me to start deluding myself into thinking I can see the future. I cannot, and neither can anyone else, right? That being said, let's talk about the setup that we have, right? Let's talk about the setup that we have. Trend that preceded, look, it's always probabilities, gang. It's never prediction. Now, I know the habit of thinking in predictions and the habit of wondering where something's going to go comes from all the folks out there who do this. How many times have you seen some clickbait title for where the S&P is going to be? The only person who can do that is Jerome Powell, and he ain't giving us his S&P target, right? So all we can do as mere mortals is say, what was a trend that preceded the current chop? It was bullish. Are we above the 200 propulsion? We are. So this would be an oversold buy, and really ideally close to the 200. And as we transition, as we did from June 23 to June 24, we start to see the stochastic confirm. So I would consider overall it's going to move higher. Overall, that would be the expectation that it's going to move higher. And then beyond that, I can put, gang, it's difficult enough to be a trader and just get the right direction and get the right entry. If you're then going to further say, well, I want to also predict and trade the idea that I know where something's going to be at a certain time of day or in a number of weeks, gang, realize that's impossible. It just is impossible. Listen to me now, believe me later. Now, there are traders out there that are going to talk with a certain bravado and confidence that's going to make you feel that this is possible. Around options expiration, there's a little bit more likelihood that catalysts for volatility can carry us to more liquid open interest levels. That there's a magnet, kind of a gravitational pull. There's definitely a magnetism there, but it's very specific to that event. The sooner we can simply say our job is to find a level at which we can control risk and then hopefully get the right direction and then give ourselves enough time to let the market do what it might without saying this is going to do this in 10 days or this is going to do this by the end of the day, the better off we're going to be. So that's where I'll always say, I don't know. And Michael, nobody else does either. And if they come off with the bravado that they know what's going to happen in 3 weeks. Well, they should be able to pick out lottery numbers too, right? And who so who's going to win the World Series? And I just don't want to go there. I appreciate the question, but let's always remember all we can do is gauge and view what we have. And I say this because I want you all to win. I want you all to be able to set up trades where you can manage risk. And then just say, look, if I give myself enough time and the probability is it's going to continue higher, there is something magical about that halfway mark. It does seem to come up a lot, especially when we use the last major move as the calculation to project it. So thank you very much. All right. So next question is setting a stop order in conjunction with trade entry order something that I would recommend, or do you recommend manage stops manually? I think it depends on you, my friend, and what type of access and alerting and connection you have with the market. I do not place physical stop orders. I simply don't. But I'm here in my office. I've got computers or laptops in about every room in my home. I have, because this is what I've been doing for 30 years, I've built my life and my environment around just being able to keep an eye on things. And then, not to mention, I have a secret device that we all probably have some version of. I've got this thing. The phone is going to alert me to certain things as well. Now, I will not ever recommend that for day trading, right? But I don't think that what the question was. If it's longer term time horizons, as long as it's not day trading, because let me just honestly, and this is a PSA now, you cannot day trade from this. You cannot. All right. I know that it seems like you might be able to, and you get alerts to it, but I'm going to tell you right now, I'm sitting in front of 9 monitors. I've been day trading on and off since the mid 90s, and I've got fast internet and immediate view on charts. And somebody out there thinks they're going to get an alert on this, or they're going to see some price alert and be able to day trade on their phone. Please, gang, doesn't work. So this is not for day trading, what I'm saying. This is really more for longer term, daily time frames, even an hourly, because at least an hourly is only a new candle every hour. I'm finding in this stage of my career, gang, it's less about my teaching traders brand new things, because the foundation that's been working me for 30 years is exactly what I'm going to continue to share and reiterate. There's no reason to reinvent things. Usually it's just not going to be that useful. I want to share things with you that I've been doing for decades, right? So at this stage of my career, I find that I'm trying to let traders know to avoid certain mistakes of thinking and of strategy, what not to do more so than what to do. As Charlie Munger said, trying to be brilliant, I'm totally paraphrasing and probably ruining his very succinct quote, but trying to be brilliant doesn't work. Just try not to do dumb things. And at this stage of my career, Rag, just don't do anything dumb. That's what I'm trying to do at this stage of my career. Trust your process, no prediction, and try not to do anything dumb. And so for me, trading from an iPhone, trading from any portable device, dumb. However, if we can keep an eye on the market, because this is where we're in front of. We're in front of our desktop. We're in front of our laptop. You can go with manual stops, but it could be more risk. It could be more risk. But I will recommend to all my traders, definitely alerts, a physical stop to get you out of a losing trade if that is what you need to do because of an inability to be able to take an alert, look at the market, maybe handle a little bit of slippage. So that's why I say it's really going to be up to you. But personally, I do not place stops. When I will start placing a physical stop is at a break-even stop, because now I'm managing a reward. Now I'm managing a winning trade. And trailing stops, I'll be more apt to place those physically, but I do not place the initial stop loss physically. I know where it is. There's an alert waiting there. My phone's going to buzz. My desktop's going to ding at me. My iPhone's going to go crazy. My iPad's going to go crazy, but I will use alerts for those personally. The SPY, double red daily, but the 50% weekly is on the bullish side. Avi, this is where, remember, time frames dictate time horizons. Time frames dictate time horizons. I can short the daily, and I could have enough follow through to have a winning trade, while the weekly while the weekly gets back down to the, say, 200, which is where I really like to focus on, or gets back down to even the minor low breakout around 38.80, right? There's about a 200-point area. That's a weekly chart. So a 200-point area where I could build that position. And then I've got to be willing to take a little bit of wiggle. So time frame and time horizon are going to be what you will remember allows you to be, say, longer term bullish, the SPY, while shorter term shorting or long puts, the ES or the SPY. Time frame dictates your time horizon. And these two are not really as much in conflict because the movement lower on the daily just feeds just feeds price to where our buy orders, ideally somewhere as close to 36, 36.40, 36.50 as possible. So they really aren't in as different. They're not in conflict, really, because we know that the longer term time horizon, one new weekly candle a week, probably about a 6-month time horizon to earn a spot on your portfolio roster. And then daily, that's a swing. 3 days, 4 days, 3 weeks, 4 weeks. It's a very different time horizon. Time frame is the interval on your chart. Time horizon is the length of the potential trade or position. So we will be looking at longer term time horizons today. My Sector Secrets Mastery folks, we've got our macro market deep dive today at 3 p.m. So looking forward to that. All right, gang. And just like that, my time is up here. Thank you as always for being a part of Charts and Coffee. Caffeinate and dominate. Check out that economic calendar, gang. Tomorrow's going to be a Lulu. Be good to each other.